MPC Markets Morning Call, 13th of January 2026. I'm Mark Gardner. Precious metals continued their rally last night as President Trump and Fed Chair Powell's spat really dented confidence in the US dollar. The silver rally's been just absolutely out of control, and gold as well, 4,650, I believe now. And not to mention that silver, I believe, is around about the $85 mark at one stage. Just before Christmas, we were cheering silver busting through 70. So been a fairly significant rally from there, and it really is just normally the US dollar would be the flight to safety thing, but obviously when it's the US dollar that's the problem, or the US government that's the problem, people have got to go and scramble for hard assets elsewhere. So despite all of the uncertainty in the US, the world's investors still had appetite for US stocks. And it really is a bit of a strange situation in terms of while the US government and the US financial system is looking unstable, and whoever you ask, there's a fairly somewhat volatile president in place who's sort of doing very aggressive moves. US companies are still the most innovative in the world, and they've got the most scale, et cetera, et cetera. Think Google, think Nvidia, think Microsoft, Amazon. So it is a tale of two very different scenarios. Usually, in examples in the past of markets, they're usually one and the same. However, with the US at the moment, it's the unrest and volatility around government and independence and central bank and currency, etc., is largely decoupled from from the stock market, which is still ticking along quite well. Walmart made a bit of a run last night, up 3%. The semiconductors did fairly well last night. I mean, we didn't get a major gain in the US market last night, but it was down 1% in the Nasdaq when we left here at 4 p.m. Where the ASX market shut yesterday, and now we're up. Now it's up a small bit basically. So banks, this new credit card policy potentially that Trump wants to put in next week of capping 10% rates on credit cards, obviously hit the likes of American Express and Citi, etc., and Visa and MasterCard. Truth be told, considering most of those companies are charging 17 to close to 30% on those credit cards, I'm genuinely not surprised they're not down at least another 5 to 10% more each. But I think that's probably a hesitancy from investors to in a Trump world, he announces a lot. He doesn't mean it's going to get into policy. Look, with the three issues going on here with the US government at the moment, the spat between the central bank that threatens the independence of the central bank and the president, the spiraling US debt, the invasion or taking over of another country's commodities, being in Venezuela, and the Supreme Court potentially overriding, Trump's decision to apply tariffs and overstepping his executive powers. If we had one of these with previous presidents, the market would be reeling. I think the fact that there's four, and the fact that there is just this constant news flow with Trump of these massive ideas is too hard for the market to digest. I honestly think that we're probably in a bit of a sense of denial about how much this takes away the ability for any of these businesses on this heat map to plan anything for the next 12 months. So I would, we do kick off earnings season with the banks next week, actually no, it is this week. We start JP Morgan, Chase Manhattan, Bank of America, Wells Fargo will be reporting fourth quarter earnings towards the end of this week. So then we'll run into a slew of earnings, but I honestly can't see there being too many rosy outlooks coming when we've had one of the longest government shutdowns in history. massive amounts of layoffs from companies that have been hidden in the numbers because of the revisions, and then uncertainty around supply chains, uncertainty around tariffs. I mean, to be honest, you're a genius, or you're blind, or you're a moron if you're if you can find optimism in that. So yeah, but Aussie rallied it back a little bit, as you can see, just small gains there for the Dow, etc. It wasn't an overly, but that really does, it doesn't take into account that all of these US indexes were down 0.5% to 1%. Here's where the big show is. I mean, silver 12% for the week, another 7.5% last night. Lithium 8%, 8.5% for the week. Some of those lithium names, like the likes of Liontown and PLS, that traded. Now we're talking, I think, around about $1.70 for PLS back in maybe September last year, are nearing record highs at $5. So this is, when we're talking about a scramble for real assets and critical minerals, etc., this is the extent of how much this has turned around. And a shout out to those of you who were believers and held on and stuck to your guns. You're being rewarded now because it was a I think now with Trump making everything so uncertain globally, countries and companies have just realised they're not going to get just-in-time supply chains anymore, and they're starting to lock down those raw resources, which massively reduces China's ability to manipulate commodity prices down, which is what they were doing in the lithium market via their futures market, which was questionable at best. So, but gold was up 2.3. 3% for the week. Gold keeps chugging along. Copper as well was up 2%, flat for the week, but you would expect that to start to follow. Platinum, I've got to say, mildly disappointing. Crude continued its rally. The US dollar is lucky to be down 0.25%. I think, one thing we're looking at here is, particularly for ETF holders, which is a massive option for ASX investors who don't have access to US stocks, is at least suggesting switching to that hedge version. So, for instance, Qual, which we've held in a couple of portfolios, is there is QHAL, which takes out the currency risk, and you get to own those US stocks, but not denominated in US dollars if there's issues with the US moving forward. So we do have CPI tonight. We got consumer confidence today in Australia. That could be a relatively interesting number, just on the back of the fact that it was the shock sort of RBA hawkishness at the last meeting might really take some of the sting out of it. And yeah, we're fairly light in terms of company announcements. We're sort of starting to hunt around a little bit for things that might be showing a little bit of value, leading into Australian earnings season. And but I wouldn't say that there's a huge amount of corporate news. GQG 3.9 billion in 2025 outflows in total. That's in the AFR, but that really is an alarmist headline. And yeah, we're basically looking into our webinar on Thursday. This market outlook. You can check out our socials and register for the free webinar for our market outlook in 2026. Covers 5 key themes and just some general talk about risks for the year and places where we think we'll start to see some movement to the upside. I think 2026 particularly is not just going to be a rising tide floats all boats. I think the index players will do much worse than the stock pickers in 2026, because this won't. it's only the 13th of January, and here we are with more news than what most years get in 13 days, and a lot of things to balance up geopolitically, and thematic wise. So yeah, I think it's one of those important years where if you're agile and you stick to the themes that all have really, really solid tailwinds, you'll keep yourself out of trouble in what will largely, in my opinion, be a year of consolidation after one of the best 4-year rallies really in 30 to 50 years. So don't give away those profits you've made in the last 4 years. Make sure you watch join me for the webinar. Rebalance that portfolio and keep out of trouble here in 2026. But that really wraps things up for the day. We will speak again tomorrow.